All right, how we doing tonight? Okay, can you hear me clearly and see my screen? All right, we're good. Let's do it. All right, welcome to Beat the Market Maker. It is Wednesday, September 21st, 2022. This is Steve Morrow. Looking forward to a great session. Hope everybody's doing well. Nice to see everybody in here. It's always a pleasure. All right, third quarter's done, man. Wrapping it up. Got a week left. Whatever you were going to do last quarter, if it ain't done, time to look forward, move forward, figure out what you're going to do with the last 3 months of the year. All right, so we're coming into October, November, and December. That's going to be the last quarter, and it's really a short quarter. December is pretty much a bust, and you lose a week in November. All right, so you got 81 days behind you, 10 days left to the end of the quarter, give you 91 days, and 102 days left to year end. That's where you're sitting right now. So these numbers tick off, man. I remember writing this like January, like it was 20 minutes ago. All right. This quarter, we're sitting right here. Okay, so you got a week left. So depending on where you are in your cycle, in your emotional cycle of change, the EEOC, what your plans were or are, you need to start thinking about making a run for the last few months of the year. And it looks different for every person, but you got to do something. All right, so if you're going to trade October, November, and maybe a week or two in December and then be off, that's what you're looking at. So new people and old, go back, go through the 12-week year. So what I do is we talk about audiobooks, and that's the only type of reading I do nowadays. I try to combine it with walking or some other form of, I don't know, exercise or cleaning the house or straightening up, whatever stuff I got to do, whatever I'm responsible for. I try to do it with an audiobook at the same time. So I'm kind of listening to it and getting other things done. So go back and listen to the 12-week year. You should have certain places bookmarked. If you're brand new, go through the book and mark stuff that makes sense to you that feels like something you need to remember. And then what happens is you can go through and listen to your bookmarks or your clips to re-trigger key points in your mind about stuff you're supposed to do. I don't know if that makes sense to you, or if you'd rather listen to the whole book. Everybody's different. It's difficult to read the book multiple times, or it's difficult because it's the same principle. So if you listen to the audio clips, and by the way, I listen to all the books that, depending on the reader or speaker or how fast they are, if they talk like me, you can't speed them up too much. But if they're a little slower, you could put them up to 1.25 or 1.25 time. So it'll be 25% faster than listening to it in real time. So you'll get through the points quicker. It's just some tips that to knock out a bunch of books that I've done, and it's been pretty helpful. If you have to speed the guy up to 1.5, he needs more coffee in his life. If you could understand him at 1.5, he's too slow for me, mentally anyway. So look, man, here's where we're at. Coming in October 1st, running down next week's the last week of September. You got to figure out where you're at. What do you need to accomplish to make this year a success for yourself? What has to happen for you to consider this year a success? If you're trading at scratch, then maybe it would be nice to turn a profit on the last 90 days of the year and end the year in positive territory. If you haven't gotten off your ass and done certain things that you've been promising yourself, then October 1st would be your drop dead goal to make something happen in the next 90 days. And it could be multiple things. It could be do some homework, fine tune your entries. And I'm going to talk about that stuff tonight to help you guys. Fine tune your entries, or just end the year somehow on a positive note and try to carry that momentum into January. Here's the problem. They say it takes 20 to 30 days to form a habit. Okay, makes sense. 21 days, 3 weeks. If you do something pretty consistent for 3 weeks, then you have the momentum to carry you forward. The problem with that is if you bust your ass October and November, and then you lay off for, what would it be basically? Like, for everyone it's different, but I usually scratch out for like 2 or 3 weeks in here. So anything that you form in the prior 2 months is going to be your race going into January. And I think the point is to gain momentum going into January to keep it going. So you got to figure out a way to keep yourself committed through the holidays and maybe just scratch out like 23rd, 24th, 25th, then get back on it for a week and then maybe scratch out for New Year's Eve, New Year's Day, depending on what kind of partying you like to do. I don't know, man. It's just maybe like an extended weekend and then get right back at it. You got to figure something out, but if you want me to look at it for you, send me some kind of plan. I'll take a look and I'll make some suggestions. It's success. The problem is success is like I've put all these sayings up and it's like falls on deaf ears. Some people are like, man, it worked. Then they write me back 2 months later and go, it stopped working. You got to plan out your work and work your plan, right? All these old sayings, I could sit here and quote them for days. The problem is if you don't do anything about them, they fall on deaf ears or they don't motivate you to keep going. You got to find whatever that is to keep going. I know it sounds like too easy, but it's not really, or everybody would be doing it. So, got some things I want to talk about tonight, right? We were talking about mindset last week, and I showed you some astounding numbers for some people in the group, and basically I started a shitstorm, right? That's pretty much what happened. So I'm going to talk about that because some of that shit hurt my feelings. All right, so from scarcity to loss to abundance, right? Scale the account, not the pips. It's about the money. Got a lot of hate mail this week, but it's okay, man. It's my job. I can take it. So here's the deal, man. Some people in Skype and some people wrote me emails that the accusations were that somehow I taught the person doing large numbers something different than I've taught every one of you for the last, I don't know, what am I doing this now? 12, 15 years? I don't even know, teaching. I guess however old my son is, he's going to be 13. So I started teaching when my son was a baby. So anyway, yeah, man, that shit hurts my feelings, man. I have feelings. It's hurtful to insinuate that I would show one guy or two guys something different than I would show everybody else. The difference is his mindset and his interpretation of the material and what he thought was possible versus what you thought was possible. I didn't say like, okay, man, I taught all these suckers something. Let me show you how to really do it. Man, that shit enraged me, man. I was pissed off all week. The setups are the setups, the chart is a chart. It's your interpretation of what's possible, and that comes from your childhood, your fear of money, your fear of success. It's all these things that are hidden deep in your psychology that you just got to work through it, man. You know, 1,000% is nothing new to this group. It's just this is the next wave of people hitting those numbers. Some of you guys remember all the way back in Minnesota, a guy named Rick. He never used to stop. And he actually taught me something because I never thought of doing this. It's a great idea. Margin call was his stop out. So he would take a number that he was comfortable losing as a stop out. Right? So let's say $5,000 was his number. And because these guys run stops, he would put $5,000 in the account. They used to give 500 to 1 leverage and as high as 1,000 to 1 leverage back then. He would over leverage the account and he would take 50 lots and he would run it for 25 to 50 pips and he would just use a TP. And if he got stopped out, instead of losing 5,000 in a stop, they would margin call him out on the account. So that's how he would leverage the numbers. And the numbers played out the same. He was the first guy to make multi six figures in one trade. I don't know if you guys remember, there was a nuke incident in, I want to say in Japan, and the yen plummeted against the dollar, and he was long that position, and he made $300,000 and the brokers wouldn't pay him. He made 300 grand in like literally 15 or 20 seconds. He put a 50 lot long position on in dollar yen, and something happened right around 7, 8 o'clock, and at the open price spiked a couple hundred pips, and it was good for 300,000, and they never paid him. Tried to sue him, whatever. They said it was they said he rigged it somehow, and you know how that bullshit goes. They're much better now in general. The brokers been held more accountable, transparency. I guess because of social media, people can trash them. But back then, there was no way to communicate that stuff unless you were part of a group, and it was just a handful of people. There was nothing really collectively we could do. There wasn't enough of us. Anyway, uh, you just got to figure out where you are and what's possible for you, and then you got to expand on that, right? I teach the same stuff to everybody, and the only difference is between one person to the next is their mindset, right? It's attitude about the drills, seeing the value versus the work. The people that are doing these numbers, they're just different, man. They're built different. And I don't mean it as any disrespect to anybody, but here's what happens. I tell them to do some homework, and they just friggin' do it. Send it to me. I tell them to mark up a spreadsheet and make their projections. They do it. I tell them to do the 3 block drill and send me the blocks, and let's figure out what we could do different. And they just did it. Right? So what's the difference? You get aggravated. I mean, I know there's some people in the group that have been aggravated with me for years, and I don't know if he's here tonight. And he finally did the drills, and it turned his life around. So when you came to me and I told you do these drills, what were you thinking at the time that you didn't do them, that it took you 4 years to do the drills? And then when you actually did the drills, they worked. The thing is, look, we have a formula and a systematic approach to the markets, and I've fine-tuned my teaching over the years to give you a systematic approach to learning the business, right? It's the basics, the foundational M's and W entries, and then the advanced stuff. And along the way, there's a couple of drills that would be very beneficial for you to do. How do you think Carr became so good at the TDI and creating his own signal setup with that? Because he did the drill. Carr was one of the first guys to hand me a thumb drive with 1,000 charts on it, right? So I knew immediately there was something different or something special about him that made him, and I don't want to say better than everybody else, maybe more motivated than everybody else. I don't know what made Carr. Okay, I taught, like, I don't know, the first class, it was at another company, if you remember, but Carr was the first guy to hand me a thumb drive, and there was 50 people in the class. What made him, out of all the 50 people, at the end of 4 days? So basically, he sat in class with me for 25, 30 hours and went home and did that shit. And he handed me a thumb drive at the end of class. So he must have went home and marked a couple hundred charts a night, like exploded with excitement. That's what I don't understand. What made him different? Jim downloads charts for like over 10 years now, every single week, and goes through them and the setups and sees it. That's like, I don't know, what would he be, like flashcard maker extraordinaire? Okay, well, that's what it takes. That's what it took for him to see things a certain way. So what makes those two guys out of the class of 50 different? That's what you have to ask yourself. You just sit here and think staring at charts it's going to come to you. It's not. You have to look at them after the fact and then in real time. That's how it works. You go back and identify the patterns after the fact, then you start trying to develop your brain to see them in real time, right? And remember the difference between a flashcard and a markup, okay? A flashcard is like when when you hold something up for a kid, 7 plus 3, and he answers 10. Okay, so he's seeing the problem without the solution. He's given the solution. So in your mind, you mark up a flashcard right before, right? You draw all the stuff on there, and then in your mind, it's supposed to go in, retest, and fall, right? Flip. So you print a chart previous to the execution point, right before the execution point. That's what the chart looks like. Then on the back, you put the solution, how it worked out. And when you hold the card up next to your chart as it's developing, it's going to look very similar to this, or it's not a trade. So it's just really some attitude about doing some work and not cursing me out in 5 languages, right? 4 of which you don't speak. Some of you are multilingual, bilingual. So listen, man, I love you guys. I love this business. But how can I give you that same enthusiasm to actually do some of the work? I don't know. So I'm asking. But I promise you, I didn't teach this dude anything different. It's the same stuff. The guy just did the drills, right? It's self-awareness, self-confidence. What are the traits that this guy has? If you took 6 months starting right now and did nothing but drills and homework and added the point shaving in there, and I'm going to talk about that again tonight because believe it or not, he did it. If you just, okay, some of you have been with me for a long time and aren't making the numbers you want to make, but I could just literally, your digital footprint, go in there and look how many hours you got, what work you've sent me, and that's the difference. So if you took the next 6 months and did nothing but focused on making 100+% with ambitions of being 500% or 1,000%, right? Where would you be if you just waited? If you 6 months back you committed to doing that, if a year back you committed to doing that, you understand? So whatever time you've wasted, draw a line in the sand. It starts today. You got 90 days left coming into the quarter. It's a perfect time to start saying, okay, you know what? I'm going to hit next year, 2023. I'm going to hit the ground running. I'm going to take the next couple of months, the next 90 days, next 4 months, and I'm going to work on the stuff. I'm going to send Steve the homework, and I'm going to make something happen for 2023. Right? So the thing is that maybe the goal in your mind has been, well, I got a small account. Maybe I'll qualify. Maybe I won't. I'm going to make 10% a month. What about 100% a month? What about 500% a month? What about 1,000 a month? What about 1,000 over 2 months? You got to start thinking differently in order to get something different to happen to you. Right? So if you took 6 months to practice and then a month to actually hit the numbers, 7 months from now, what would that be worth? What kind of skill set would you have? Right? The skill set would be priceless. I was going to talk about more about this psychology and the issues that are played, the things going on, your perception of what isn't a great return, right? This stuff should be shattered in your mind now. I know some people are complaining about, oh, we should get this guy in here and teach everybody. That's not his freaking job to teach you guys. It's not his job to come in here and show you what he's doing. He's doing the same shit, just more of it. The same shit that I told everybody in the group, he's doing it, just more of it. Or he's actually doing it and not pretending he's doing it and act like you don't hear me and ignore me. Right? But this should shatter what your perception of what's possible is versus what everybody tells you is possible. That's their imagination. Right? You should have a new energy. If nothing else, that should have got you excited and realized that shit, man, there's really big numbers in this business. Right? And you should be able to have the ability to produce unprecedented returns for the rest of your life. That's what if you dedicated 3 months, 6 months to the process. It's about process, man. And look, everyone's saying, oh, the market's choppy, the market's this, the market's that. That's some shit you put in your own brain. There's setups there. I mean, I know GBP was sideways consolidation, but there's opportunity multiple times during the course of a week, during the course of a day, and you can't tell me there's not. It's there every single day. I don't know how many different ways I got to say this. Right? What's the point of all this? The point of all this was that I've discussed this stuff for years, and you guys went nuts this week. Right? But only out of all the guys that have been through here is a handful of people that have reached out and said, okay, what can I do to do this? The rest just bitched and complained all week. Right? Which further emphasizes the mindset, the attitude about it, of not wanting to do the work. Right? And I'm not going to say like, oh, that's younger, entitled people. No, it's some of the older guys too that have been with me for a long time. But you know what? I could tell you the people that were complaining. All I have to do is go in there and look at their digital footprint. And I did on a couple, and their digital footprint is shit. Very few emails. They send me one or two charts in the very beginning, which is in the first day of the first class, the tests. That's all I got from them. So yeah, that's why you're struggling. Okay, so I want to talk about the spreadsheet stuff. This 30 block thing, this is a big deal, man. And maybe you'll feel different about it after seeing what's possible. So you got to execute 3 blocks of trades. Got to analyze your stops. Okay, if you're using a 15 pip stop, if you bumped it down to 10, how many trades would have survived with 5 pips less? Then further it, 10 pips less, 7 pips less. What can you get the number down? What are you capable of doing if you're more deliberate with your executions instead of a sloppy execution? Right? It comes down to practice and discipline. So let's look at numbers together today for a few minutes and let's figure out what's possible. Right? And look, it's not magic, it's math. The business is a big math problem. How can you solve the math problem? I showed you a few weeks back how somebody with a 40% win rate netted $20,000 by using a 3 or 4 to 1 trade ratio. Okay, well, Steve, I'm using a 30 pip stop. I can't get 90 out. That's a tough hold. I agree, it is a tough hold. But what can you get the stop down to on the same trades? By being a little more deliberate in your execution, by executing at the perfect point of attack, by maybe not trading GJ because they have longer bars in there and bigger spreads. I always talk about spreads, the cost of doing business, right? Euro, 0.5 to 0.9, depending on when you're dealing, 0.5 in a commission, depending on where you're dealing. That's okay. If you got a 0.5 spread to 0.1 at volatile times, that means that your stop already can be tightened up. If you're trading GJ and it ranges between 5 and 10, depending on the time of day and volatility, okay, well, then you got to account for that. If you're trading Mexican peso, which is absolutely ridiculous because of the spread, what does your stop have to be on the spread? How are you going to ever scale that lot size wise? You're not. People send me these crazy exotic crosses day trade. I'm like, what made you pick that? I don't know. I just like it. What do you like about it? The spread is 10. The spread is shit. What made you pick that? Ask yourself these questions. If you're trading some weird cross, and I'm not picking on people, I guess I am. I'm pissed off. But if you're trading some weird cross with a wide spread, that costs you money. There's cost of doing business in that. You're never going to get tighter executions if you're trading something that you have to account for a large spread. All right, so look, I showed you this last week. Right, we're looking at a $150,000 account. I think that's a reasonable number to qualify for. I think it's 200. It's probably like 50, 100, and 200 or 150, 200. I don't really know. We're talking about a 2% risk here, right? 15 and 30. That's a 2 to 1 risk to reward ratio. You take the trades. I want you to look at the numbers in here, okay? So you're booking about 6,000 a trade, right? And then it ramps up every 10 trades, and you're at 8,000 and change, 8,500 a trade. This is a standard 2% risk, 15, 30, 2 to 1. But what if you could shave a couple pips off of here? What would that do for you? Okay, $150,000 account, 1.5% risk, lowered the risk and went from 3 to 1, 10 to 30 by just simply shaving 5 pips off the backside right here, by being a little more deliberate in your executions. Even if it ends up meaning you have a lower win rate. A lower win rate is still going to give you, with 3 to 1, is still going to give you a higher return on equity. But the thing is that how long are you going to accept a lower win rate? If you start making your stop 10, you shave 5 pips off of there, you're going to start adjusting your behavior. You're going to start being more deliberate. You're going to focus harder. and your numbers are going to skyrocket. Okay, so you went from, right, your risk amount, profit goal is 6,000. With a 2% risk, you lowered your risk, and you're still same. Okay, but look what happens when you take a 0.5% risk off and you scale harder. You're trading 10,000 a target inside of 10 trades. That starts to add up quick because you start looking at the 3 block, 30. By the time you're down here, you're hitting 25 grand a trade, 24,000 a trade. Okay, so now ask yourself, what does it take to double account at 3 to 1? That's 10, right? 150. It doubles where? Right around here, 303, right? So we're 10 and 1, 2, 3, 7. 17 trades, you double the account. Can you pull off 17 trades in a week or 2-week span? That's a 100%er. Take a check and reset. Can you get a 50% return? Can you get a 75% return? Can you execute 10 trades in a week? Yes, they're there, they're available. It depends on how aggressive you want to be. But this is the key to making these numbers possible. Okay, what if by some argument you could really tighten it up and get it down to a 5 pip stop? Now it starts to get pretty exciting. Still 1% risk, $150,000 account, 5 pip stop. 6 times 5 is 30. This is a 6 to 1 trade ratio. Now right out of the gate, you're booking 13, 14,000 a trade. What does it take to double the account with these numbers? Right? Under a 10 block. Can you get 10 trades in a week? Can you get 20 trades in a week? Now you start to see how it's possible. It's just math. You're going to get stopped out along the way, but most of the guys in here are pretty accurate and they're hitting pretty decent numbers. They're just not scaling. They're stuck on trading a single lot or 2-lot trade, and they're not doing what's necessary to get to the next step. If you're hitting 75, 80% of your trades, 7 out of 10 success rate, and you're trading fixed lot sizes and you're not adjusting your account, shame on you, because you're 2 or 3 tweaks away from big numbers. Okay, I don't know if this makes sense to you guys, but if you want to do this with me, I've made this offer 1,000 times, and today's 1,001. Go take 30 trades. I don't care if it's demo or real. Take 30 trades, plug them into here, send me the numbers, and we'll see where we can make adjustments. Okay, if you're trading 10 and 25, 2.5, add 5 pips to this. If you can get in on the very beginning of the impulse leg, depending on the pair, GBP, Euro, you should be able to squeeze 30 out. If you're trading a 5 pip stop and 15, that's 3 to 1, that's not bad. But what's possible? Can you get 6 to 1? Can you get 10 to 1? Can you use a 3 pip stop? Yes, there's people in the group using 3 pip stops. There's actually people using 1 and 2 pip stops. So it's really like a 2 pip stop. It's 1 plus the spread. Now think about that for a minute. 10R trades, right? What if you just use a 3 pip stop? What happens to your lot size? You're trading 75 standards in the beginning of the spreadsheet versus 15. And the risk is more on this account. So to get 15 lots off with a 15 pip stop, you can only get 15 contracts on the table. If you start really tightening yourself up, you can get 75 contracts on the table, and the trade is worth 22 and change right out of the gate. It's just math. Okay, so if you already know your hit rate, what your hit rate's going to be, then it's simple. If you know, hey man, I'm hitting 7 out of 10 pretty consistently. Every 10 trades, I'm hitting 7 and losing 3. That's what that amounts to. So go back through here and do lose, 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 and take your 10 block and see what the block looks like when you put the actual numbers in, right? You put the numbers in here, and it'll give you the projections. So if you know if you're a 60% trader, put 4 losses in, 6 wins, and it'll give you the projections where you're at. When you start seeing these X's in here like this, that means that the numbers are too big to print. You got to expand the cell. That's some scary shit. 5 blocks in, you'll break the dealer. That's the kind of stuff that I'm talking about. And this is nothing different than I've ever talked about. It's the same shit I've been talking about since 2010 or 2011. Nothing's changed. This sheet's been around forever. It used to be DDSM is the guy that invented it. I don't know what happened to him. He vanished. But the sheet is brilliant. It's how to compound your returns, and a lot of you don't even give this thing the time of day. So it's multifacets to the business. I've talked about this. It's not good enough to make great entries. That's the hardest part of the business to master. But if you've mastered it, then you need to move on to trade management and money management. Moving your stop too soon to break even, fear of loss. Leave it in place. The numbers take care of themselves. If you're using good risk to reward and you're making good entries, then don't move your stop too soon and tap yourself out on the pullback and get out of a trade that's supposed to be 30 that went for 50, but you tapped out at +7 or +10. Trade management. Then there's equity management, money management. This is the third facet of the business that a lot of people are not doing. You know, look, I love this business. I love having a group. I love you guys, man. I want to see you succeed, and by no intent to offend anybody or to make you feel like, oh, Steve's teaching this guy the secret sauce, and I'm sitting here, and man, that's dismiss that shit from your mind. It's not how I operate. I want everybody to make those numbers. I hate the dealers. I want you guys to break them. All of us. I want you to crack these guys in half over your knee. Can't think of a better way to put in my eulogy that he helped thousands of people break a dealer over his knee. Okay, so let's move on to some. I teased the drill last week. I want to cover the drill and before we run out of time. So storyline stuff, right? We talked about what's your background. When you walk up to the charts, what are you looking at? What's your background? Okay, you got yesterday GBP dropped. It looked good. You had some heavy consolidation coming out of Asia, carrying all the way through London. Then you finally got to move. Okay, no trade last night. I was looking. I drew boxes on that shit, and I was looking for something to break. Right? Break down or break up. Give me something I can lean on. Well, you can lean on the consolidation, but it took all night to print it, and I couldn't hang around. Right? What's your background? What's your storyline? What are you thinking about when you look at the chart? Got to identify where the anchor is, high of the day, low of the day, moving average crossover, whatever you're using for an anchor. Then what you do is you draw a box on every rejection counter to the trend. Use the body and wicks and aggregate the closes. I'll go over that. Look at prior rejections to get a rough idea. Right? Always want to be leaning on something on the chart. Blue tracer, right? What are the things you can lean on? We talked about it. Blue tracer, multiple blue tracers boxed, AR levels, blue tracer, an open price, 200 bounce, 50 bounce. Coming out of the London shadow, right? You know the London shadow is the high and day of the gap, right? Or the high and low of the gap. So that becomes sometimes, right? Brings trade is when the high of the day or low of the day is formed in the London shadow. So that's a level, right? You could even AR it. AR 50 it, right? That's a setup. If you got something compelling here, like sideways consolidation or some type of pattern, and it'll flip. You can use the day open. You can use the opening drive of the range, right? They trade the opening range in the U.S. session. You could trade opening drive in the London session. It's a thing. If you never thought about it before, it's a thing. In Forex, we use the gap times because they switch dealers. All right, but you got to be leaning on something. Always be leaning on something. What's in the box with you? What's in the area, right? So here's the rules for it. You need an anchor. You need a zone that's going to flip. You need a rejection of that zone. And you draw a spot for a projected second leg, and you define the entry. You define it and refine it over and over again. Put your limit in, wait and see what happens, manage the trade when it fires. That's it. Very simple. Right? Someone posted ABL. Always be learning something, man. Always be learning something new. So here's the theory, right? You get print, anchor, right? You have your AR numbers. You're looking for maybe a 3 count into here, some high side rejection pins. You have your apex nadir thing. You have your AR levels projected out. You're looking for some type of pullback rejection, pullback rejection, pullback rejection. 1, 2, 3, 50% pullback. 1, 2 into the lows. And if you miss this, if you come to the session late and miss this, then you're looking for a measured move from the distance here and the distance here. So let's say this is 35 pips. You're looking to get an entry on this 50% pullback, right? Micro double top, and you'd make the 35 pip projection down here, and you can grab that secondary push. That's it. Basic chart stuff, basic chart patterns. The difference is that you're not chasing this shit into the lows, and then you have to have a 30 pip stop above the high. You're looking for a very precise entry, right? And it looks like this. Take a picture of this. This is the chart example. So here you go, right? You got 3 pushes into the high on this. It's cut off here, and you got this little V pattern vector to the high. GBP, flat print, my favorites. Look at the flat prints on these. Those little yellow hashes are the points of control. That's the highest volume traded in the bars, right? That means that when you remember the cells of the bar, right? When we talk about the bar, the cells in the bar, okay, they're split. Remember, they're to cover the spread, they're aggregated, right? Whatever the price is trading here, it's 1 tick higher if you got a 1 pip spread. If you're trading a different pair, it could be as high as 3 or 4 cells higher because that's your spread. So when you pull here, you're getting filled here. So when prices like that and you pull the trigger, you're already down 4 or 5 pips, right? If you want to use a 5 pip stop, it's not going to work because you're trading a shitty pair with a high spread. Does that make sense? That's why you got to understand the cost of doing business. If your job is to get the stops down really tight and scale your lot size, you're not going to do that with some crappy exotic. And when I say crappy, I mean the spread. I don't mean the currency's crap. It's just what the dealer's offering you, and the liquidity's light, so there's a wide spread in there. Sometimes there's a high spread and a commission. That's what you got to figure out, okay? So this is your M structure developing. So you would come out here and you draw a line here, and I want you to notice where the line comes from. The line comes from a collection of the points of control in each bar, and it makes a box. This is a common practice in the business. Every single day you could see this printing like this. So that's where these levels, right? This is Bookmap showing itself. Pressing, right? Pressing the level, holding it, making the turn bars. This is the turn bar, right? This whole thing. If you look on a higher time frame, this might be railroad tracks or a collection of one or 2 bars that make the turn to go back up. The dealer comes back towards the high and gets rejected. You're refining the entry over here. You get this pin, and you could aggregate this the same way like this. This would be your box. You get a tiny little flip here, fails to take out the swing high, that's your entry. If you didn't sell the M formation on a failed buy-side auction, then the first solid entry is below the nadir on a flip. This is the first flip. This, to me, when they take out this level, when this closes below this, that means it took out the existing level of liquidity in the book. And that's no small feat. They have to overcome it. If there's 10,000 lots sitting there, they need 12.5. They need to absorb those lots and come in with more pressure. That's how price flips. Right? That's how they do it. So you have your 1, 2, right? Second leg of a big second leg. It confirms when it closes below here. Now, you're in the trade. Your stop's right there, 5 pips, 7 pips, whatever you got it down to. You go in here with sell limits, right? You put a sell limit at front of the box, and the whole box shouldn't be any bigger than 4 or 5 pips. If you drill it down to a 1 minute, you can get it even tighter. 5 minute, you can get it tight. Okay, when this shifts below here, that confirms the trade is valid. You can go to break even. The stop has to stay above this swing point because the trade will become invalidated. Now they'll approach the swing point again, but if they break the swing point, you need to be out of the trade because they absorbed back into that level. If they take out the high swing, you should be out by then. All right, so now when this closes below this swing, the trade is validated. Here's another shot to get in, right? You get this, you're looking for a place to refine the entry. It would be off of here. You do not get a second M. So you're holding the trade. When the trade fails to get back above, takes out this, the trade is still valid. And it happens to be 1, 2, 3. You got in on 2, so you only have 2 pushes available to yourself. You got to keep mindful of where you are in the cycle. If it's a 3 push cycle and you're getting in on push 2, you got 2, 3 out. Right? And you can revert to, I hate when it gets all inky like that. Hold on, I know you guys get mad at me too. If you're doing a measured move, you could take this distance from here to here and you could impose it over here, and they're going to be very similar, if not equal, almost every time. So if this is a 20 pip impulse, then you're going to get a 20 pip impulse here, and your target should be 20. If you don't get a zero entry, if you get a shitty entry, if you got in down here, then you got to count for that. Then you got to go for 15. You got to subtract 5 from the high swing or wherever you got off at. If you got the trade off -7, then you got to make that 13. It's just math, but the thing is, you got to think on your feet. Just because you got the pull doesn't mean it's going to go for the full 20. It's going to go what it goes. And that comes from charting and knowing where you're at and what the impulses are in the pair you're trading. Are you trading the futures contract? Are you trading it at a GJ, at an aggressive broker during Asia? All that shit matters. Right? There's ADRs, and then someone has broken the ADRs down to sessions. Right? What's the average move in a session? What's the average move during London? What's the average move during the US session? That matters. Oh, I got that trade damn near zero entry. Okay, well, good for you. I'm glad you got it. But it's 2 o'clock in the afternoon on a Thursday. That shit ain't going anywhere. Right? You know what I'm saying? It's like you got to keep everything in perspective and context of where you are. If you caught that shit at the London Open 15, 20 minutes in out of the shadow, man, you nailed it. That's probably a Brink style trade. It's going to go. That's something you can hold. If you caught this structure at 4 o'clock in the morning and you got in right there, then you got the whole run in front of you for the day. If you caught this shit setting up, going into consolidation, right, you caught it down here, and this is the end of the day, then you get what you get. But just because you took it doesn't mean it's going to go for 5 million pips. That's how everybody thinks. It doesn't work like that. What time of day is it? What am I leaning on? Where am I in the cycle? Where's the next level it's got to overcome? That's the stuff you got to be asking. That's storyline shit I talked about a couple weeks ago. What's the storyline? Is there news on the books? Is the news going to fuel this or hurt me? Do I have enough pips in place, and can I get a decent break-even stop? If you're trading through news and you want to hold it and you think you got the right edge, then you need bigger than a 4 or 5 pip stop for news because you're going to get slipped. Right? So you got to have at least 20 or 25 in your pocket and go to plus 10. So if they slip you should still cover in positive territory. It's no guarantee, man. You've seen the videos when they pull the liquidity book goes black, you ain't getting out. But it depends on the news, man. If it's bright red, triple red, probably better off just taking what's on the table. If it's yellow, if it's medium rare, it's probably okay. All right, so look, so then you get another flip developing, right? So this, if you were looking for a second entry, if you didn't get in here, you didn't get your second leg. So then price pulls back, it throws you an entry, right? This is where you're refined. This is basically a 50 bounce trade, but you don't want to get in chasing it down here. You want to build. You're looking at this, look at the flat prints on the bars. This is common practice. And you can make the argument to take these pieces too. There's your box. What does it do? It throws a micro M structure. You come in here on limit. You're going to have your limit resting maybe a tick or two inside the box. You're going to get filled, immediately rejected out of there. Steve, is the trade still good? Well, yeah. How do you know? Because this structure closed below this structure, and that means the liquidity was sucked up on the push, but it turned it back. Is the trade still good? Yeah, it's still good. Why? Because they didn't get back into this box and stayed below. The area becomes blocked, right? Remember how Bookmap works. They put a liquidity level in the book, price breaks through it, goes lower, pulls back, they chase it down with liquidity to block it, right? Remember Pac-Man eats the level, comes back up, Pac-Man eats the level, pushes it down. I got to put the little eye for you. They're eating the level, right? They go down lower, they eat the level. Pac-Man comes back, they bite it and send it down. You understand? Okay, but this is the best opportunity, and I like this better because it shows me that it cleared the AR level or the apex nadir area on the chart, and that the intent is to make that the high of the day and to continue on. And I can get into something like that with a 5 pip stop or even tighter. Okay, so now what happens? You show up late, you want to try to get the last trade of the day on. You get a nice clean rejection, but they got to fail to return to the level, right? So you take the POCs, the candle closes, the bodies, the pin rejection, and you aggregate a box. You take the pin rejection, you aggregate the box, and you send it out. You include some POCs. You can make the argument to be a little bit bigger, but remember how it works. Your candle forms like this, right? Pin rejection, maybe a point of control up here where they stopped it or capped it. Or if it's a red bar, the POC would be towards the bottom where they flipped it and came through a level. So you want to take the wick and a little cell or two on the top of the body and stretch that out forward into time, and hopefully they'll come back and retest into there. And this is typical, man. You'll get a couple of hits into the box. You'll get a failed auction. You'll get a hit again. You'll get a failed auction. And then towards the end of the day, they'll start spiking, which one single leg hits the stops, gives nobody a chance to get short. Because it happens, you try to refine the entry, and it's too late. They shift it away. You can make the argument that you can come in here and do it. The problem is you don't know if it's going to hit here or if it's going to return to the box. So then your stop has to be above the swing. So you want to take the last swing high in every instance, right? Start looking at it. Look at it with a different eye. You box this in, you box this in. Steve, where's price going to go? I don't know, but in about 10 minutes, I'm going to be able to tell you. Why? Because they're either going to break lower or they're going to break higher. That's it. Go look at the consolidation in GBP from earlier today after it went sideways all day. How do you get a move? They broke lower, retested the area, and dropped a little bit. So you come in, I don't care where you are in the world. You come in, you have your Asian range formation, you have your AR numbers extended out. There's only two things in this entire world they can do. Well, three, because they did it last night. They're going to break above and go higher. They're going to break below and go lower, or they're going to screw around with you and consolidate all session. That's it. What else they got? But the thing is, they entice it with these little quick moving spikes and get you people excited. Not us. We know better. To get you excited that it's possible, right? It's possible that they might do something. So you get scared and you jump on that shit. All right, I got one more pop quiz. I'm going to wrap it up. Take a minute, look at this chart, tell me what you see. Walk me through like I just walked you through. You ready? Go. 30 seconds, go. All right, what do you got? Okay, you ready? I'm going to walk you through high speed and you can watch it again on the video. Swing high, swing low, break lower, retest, sell. Swing high, swing low. They broke lower, trade to the low. Is trade any good, Steve? Yeah, they took out that low. They pull back. There's your box. No entry. Fail to return. There's the low. Now I'm looking for an anchor. What's my anchor going to look like? Okay, I got this level and I got this level. What am I looking for? I'm looking for a break lower or a break higher. Okay, Steve, they curved the book and pressed it down. Okay, my level's here now and here now. Why? The last place buyers tried to go long, they pressed it. The last place sellers tried to go short, they pressed it. Now I'm sitting here. They break above and hook back. You can try to refine off of that. Sometimes you need a little more spacing. Remember I told you need a finger in there. Finger roll. Okay. They pressed down. They pressed up. Last two places on this impulse. Right here and right here. Right? Okay. They hook back, goes higher, rejects. This is an area of where the book pressed the rejection. Take the tops, the bodies, and a couple of pins, stretch it out into time. Okay, what happens? They rejected it, went higher, they flipped the book higher, and they came back and they printed a baby W. You're in. Nice little run. Okay, they came back to this level and they closed above the pins. What am I looking for? A pullback and an entry. Okay, I'm going to come down here and I'm going to grab the body and the pins because I have no pin on this. This closed above. I'm going to box it in. Whole box is about 5 pips. There's a baby W. I'm looking to get long in here somewhere. And there's a little trade. You could do this all day on any chart. All right, look, I'm going to tap out, man. We'll do some more of this stuff. I have some drills we're going to do. Since no one's sending it to me, we'll just do it. All right, Kevin, thank you. Appreciate the compliment. Dakota, nice to see you. Mike. Giuseppe, great. Grame, always a pleasure. Hope you guys are doing well, man. Listen, I got one set of teaching. This is it. It's the same shit since I came on the scene 12 years ago. I've been doing this stuff for 23 years. Nothing's changed. The only thing that's changed is my ability to deliver this. Maybe I've gotten better, maybe I've gotten worse. But be mindful of shit that you post about me and say to me. I read everything, man. Don't think for a second that I'm holding anything back. This is everything I got. It's really this simple and this complicated at the same time. Just be careful what you say because it's, there's real feelings here. That shit hurts my feelings, man. There is nothing else to show you. It's a combination of execution, money management, and trade management. There's nothing else. What you take away 10% or 100% or 1,000%, that's mental for you. That's a mental challenge you got to work out. If you're happy with a 10% return, I'm happy for you. It's fantastic. If you're making that and you're happy, that's fantastic. But what's possible is different than for everyone and everyone's perception of that. All right. So send me some emails, send me some point shaving, shave some points off your stop side and add some on your take side and see what a difference it's going to make. All right. Good night, man. See you guys.